Hey guys, this is Daniel Miller with Upward Realty, and today we're going to be talking about how do mortgage rates affect home prices. Okay, so today we're talking about how do mortgage rates affect home pricing, and I've got a friend with me. This is Pete Metz with Loan Simple.
Hey guys.
And we're going to be talking today just to kind of get into Pete's mind a little bit, talk about his experience. He's been in lending for a while. I've known Pete for a while. He's a good friend and mortgage partner, and he's helped out a lot of clients of mine. And so I just kind of wanted to ask him a few questions and get some of his insights into some of these topics that you guys as home sellers and home buyers are facing. So I think one of the first things we wanted to dive into, Pete, really was just, mortgage rates have been moving quite a bit over the last 6 months, kind of up and down. And what does that mean for us?
Great question, Daniel. Thanks a lot for having me on.
Oh, yeah.
Yeah, so interest rates have been moving a lot. As soon as Trump got into office, interest rates hiked up a full percent. You know, we were in the high to mid threes, and then once he went into office, rates hiked up. And also that you'll notice the stock market, there was a big boom in the stock market as well. And so people basically took their money out of the mortgage, out of the mortgages, out of the mortgage bonds per se, and they put that money into the stock market.
Interesting.
And so the stock market did this. So what you're seeing recently, so in October of this last year, interest rates were about 0.5% higher, half to 0.75% higher than they are right now.
Wow, that's quite a bit.
Yeah, and so what's happening is the stock market did take a little correction, although it's doing good right now, but the money has kind of flowed back out from the stock market and back into the mortgage bonds, and driving interest rates lower.
Okay.
Interest rates have improved about 0.5% to 0.75% in the last 6 months.
Okay.
And it's interesting because that does have a lot to play with affordability and being able to purchase a home and having an affordable monthly payment. And it's a big concern for a lot of people.
Okay. And so I won't really hold you to this, but if you're looking at someone who's around a $300,000 purchase or so, what does this really mean for someone who wants to buy the home? Like if they were looking, 6 months ago and now they're looking here, can they afford more or less?
So great question.
Yeah.
What you're saying, what would their payment be in October versus what would their payment be now for the same $300,000 home? So it's a great question. You're looking at about $100 to $150 per month for lower now than what it was in October.
Okay, so it's a pretty good time to move forward if they had been thinking about it.
It's a great time for sure. It's a great time.
Okay.
Yeah.
Very cool. All right, so next question is, recently you met with a local appraiser, Bob Sprinkle.
Yes.
And he's got some great insights in the market, and you have your own video on that. But I really kind of wanted to ask you a few questions around that. So what has he been seeing, as an appraiser that's been in Reading here locally for 20 plus years?
Yeah.
What has his experience been recently?
Yeah, so one of the biggest reasons why I had him on is I get a lot of questions regarding the real estate market and what's happening in the real estate. And the big question that I get is there a bubble?
Right.
And that's the biggest thing that I actually had him come on for was I asked Bob, I said, Bob, what do you think? Is there a real estate bubble right now? Very interesting what he said because he's been appraising homes for over 20 years now. And he saw the big boom before 2007. He saw home prices appreciate. And then obviously he's been in this market as well.
Right.
So the biggest thing that he said was before 2007, for 5 to 6 years straight, from 03, 04, 05, 06, homes were appreciating at 10% a year every single year all the way up until 2006.
That's quite a bit.
Yeah, that's
quite
huge.
A bit, yeah.
And so for us in the last 5 to 6 years, homes are actually moderately been appreciating 3 to 5%. Last year we saw 5.95% appreciation. And he did touch on that. The 5.95% appreciation, 4% of the appreciation came after the car fire.
Oh, wow. So we were only at about 1.9 up to the car fire.
Yeah, so very moderate. Yeah, exactly.
Wow. Yeah. That's a pretty big jump. And I would kind of concur with seeing an increase in prices since since the car fire, they've definitely gone up pretty considerably.
Yeah.
So that kind of helps to answer that question. I mean, because I think I've really seen this quite a bit. People are very concerned, like, are we in a bubble? I think the short answer is yes, but like, is it the same as the last bubble? And that's always the fear, is like, am I going to get burned? Am I going to be like, am I going to owe way more than my house is worth? You know?
Yeah, it's a great question. And my opinion, and also Bob's, was the market could take a little dip. Maybe that we see a 1% to 2% price correction, in the next 6 to 12 months. But if you're looking at a 3 to 5 year period, if you're looking at purchasing and you're going to be in this home for a while, 3 to 5 years, homes will appreciate. And we did talk about, in 2 years, minimum wage is going to go to $15 an hour.
Okay.
So in 2022, well, 2.5 years. In 2022, it would be $15 per hour. So a married couple, each making $15 an hour, can now afford a $230,000 to $240,000 starter home.
Right.
Whereas right now, $12 an hour, they can only afford about $180,000 home.
Wow, so it's almost like a $50,000 to $60,000 difference in home affordability.
Correct.
That a lot of people who are so if there was like a couple and they were both earning minimum wage, their buying power goes from 180 to like 230, 240 sort of range. So that makes a big difference. And also that kind of helps people to be able to sell their homes for more. So this isn't just for home buyers. This is home owners seeing an increase in value is easier to anticipate in these lower ranges.
And that's why I think it's a great time to buy right now, especially in those price ranges. If you're a first time buyer, if you're
like low 200s.
Low 200, it's a great time to get in. Because for sure, because also rent's going to go up too. Once that minimum wage hits, the rent's going to continue to go up as well, because people are going to, afford more.
Right. So landlords can afford to kind of charge more for their homes. Yeah.
Exactly.
Which is crazy, because honestly, like, rentals are already pretty high, especially since the fires, and we've already had limited inventory for rentals. And then you add in like the students. There's a lot of dynamics that really put a lot of demand on our inventory just for rentals.
Right.
So then it's going to get even more competitive over the next couple of years, if we had to guess. Okay, good to know. So third and last question is going to be just about really, there's a lot of rumors about some of the first-time homebuyer programs that are going away. So like, are they going to evaporate? And what we're talking about right now is really just like the 100% financing options. And the rumors are that those could be going away. So what have you heard?
Yeah, so in the last couple of weeks, I've been getting these emails from different people and different organizations saying that, first of all, the FHA just made an announcement a few months ago saying that they're looking to pull back on the FHA loan. And the reason why is because 30% of their portfolio is borrowers that have borrowed more than 50% of their monthly income. In other words, they're spending more than 50% of what their monthly income is. Also, part of that 30% is people credit scores under 620.
Okay.
And so also in there is people that got a down payment assistance to cover the 3.5% down that FHA requires. So they're getting a little worried on a federal level, and so they want to do away with the 100% financing. I think that the 100% financing is very, very good and very healthy for an economy, especially a local economy like Reading, because I have so many families that have been able to get in with 100% financing, and you see their lives and what happens 2, 3, 4, 5 years later.
Right.
They get the
appreciation.
They have equity. They pay down their balance.
Savings on taxes.
Very responsible. Save on taxes. They come to me in the next couple of years, and they're able to either sell their home or and buy a new one, find maybe upgrade. Or they're just, able to get ahead in life.
Right. Makes a big difference.
Yeah.
So we're really kind of hoping that some of those programs stick around.
Yeah. And so on a state level, for sure, we still have them, but they are trying to put pressure to get those programs taken away. At a federal level, the state is also pushing back, and it's, they're fighting for the first-time buyers.
Okay. So we may see some of those remain in California, because it's not just up to the federal kind of like whoever runs that, it's basically up to a state level as well if those programs continue to remain.
Yes. Yeah.
Okay. Yeah. Cool. Awesome. Well, this has all been very informative. Appreciate your time.
Yeah, thanks, Daniel, for having me on.
Awesome.
I appreciate it. And if you guys ever have any questions or anything, feel free to reach out on the mortgage level. Reach out to me. You can find me on Facebook or find me online.
Awesome.
So.
Cool. Well, thanks, guys. Hope you enjoyed this. Hope this was valuable for you, and we'll see you next time. All right, thanks.